Good morning, this is Tom Alexander. It is Sunday, August 29th, mid-morning, and I'm going to do a review that basically expounds on the information that you have there in the report. If you do not have the report, go to the website and sign up. You can sign up there, and you will get at least one weekly report that I do every weekend on primarily the state of the stock market, but then any of the other usual suspects, gold, crude, the dollar, bonds that may be moving. And also, if you would do me a favor, if you are watching this, if you will like it, and if you will subscribe to my YouTube channel, and then you'll get notices of when I send out these reports. Okay, let's talk about where we are because it's quite an interesting picture at the moment. Here are the four primary U.S. trading indices, and you will notice that two of the four, the S&P and the NASDAQ, have closed in new all-time high ground. The Russell is sort of the story, and I'll talk about that in just a minute. But it's not, it's still in a multi-month balance area, but it has traded above and closed above a very, very important level, and that has certain implications that we'll discuss in just a minute. And then you have the Dow lagging a little bit, but it can do that. So there are divergences here, and you're always a little bit. You want to make note of that, but you have to put it into a context. The present context is, yes, we have divergences, but everything has been in sync now for days, meaning we have an initiative move to the upside. We have a trend to the upside. Friday was a very wide range day. All four of the indices had wide range positive days, and breadth closed at its highest level in over a year. We'll get into that a little bit later. So if you're looking at this picture, I can boil down, the next few minutes of this entire video into one very important fact. And that fact is that last Thursday's lows, and you can see all four of the indices made a low at the same time and then immediately traded higher. All four, the lows from last Thursday and all four of the indices are extremely important now. Under any time frame you want to go to, whether it's short term, intermediate term, well, shorter intermediate term, longer term's a different story, but these lows need to hold. If these lows were to come out now for a variety of reasons, it's likely to be very bearish. If that occurs, I will update the evening on which it occurs. But if all four of these now suddenly turn around and close below last Thursday's low, that's a bearish signal. Now, let's take a look at the Russell. All right, so this is the Russell, and I'm going to show the profile views in just a minute. But basically, we have a high volume node that goes by. You can see, the market, the Russell has been in balance really since the beginning of the year. And this is the high volume node of that structure. Again, I'll show you the profile view in just a minute. But you can see this is why this level, excuse me, in the Russell is so important. It's important because not only does it mark the low prior to very strong conviction that was confirmed by breadth. It is also now, if the Russell were to reverse below this, it puts it below this high volume node. The general guideline when you are trading any auction structure that's in a balance area that is mature, and this one certainly is a mature balance area. What you're looking for is an initiative move. Well, an initiative move is a trend. So you're at this point now, you're increasingly, anytime this market, in this particular instance, the market happens to be the Russell. Anytime the Russell crosses above or below that high volume node, your working assumption has to be that it is going to test or exceed the extreme that it is headed towards. So this was you had to be leaning short here, frankly, until you had this reversal here. But this was the downside level that was recently tested. Now we've traded back above the high volume node, and it looks now like we're going to trade at new highs. That's the assumption you have to have as long as this low holds. That's just auction market trading 101. Now, something else I want to point out that's sort of tangential to this is that I invite you and encourage you to go over to Twitter. Go over to Twitter and look at all the wild projections that you're going to see now. You're going to see projections to 6,000 in the S&P. You're going to see projections to below 4,000 in the S&P. And it's just that. It's guessing. This is not guessing. This is reading the market itself. What is the market telling us? Now, if there is a bearish outcome to where we are, regardless of the method you use to analyze the market, whether it's a fundamental method, whether it's a technical method, I don't care how esoteric it is, I don't care how rigorous it is, if there's a bearish resolution to where we are right now, last 30's low has to come out. It has to. So that's letting price dictate what you do. It's letting price confirm whatever your methodology is, whatever your thoughts are about where the market is. Now, as an auction market trader, that's always my default. I am always going to default to price action. So price action as of Friday's close, before we head into Globex on this evening in a few hours, the market looks like it's headed higher. Now let's take a look at the profile view of each of the indices. And let's just start with the S&P. This is the individual day view. I'll get to that in just a minute, but let's take the individual profile view of the day. This is the daily, which is basically monthly. Each letter represents 1 month of trading. And so you can see at the moment there's an attempt to extend the range of the August auction to the upside. Okay, we're trading well above the high volume node. You know, we're about to begin the September auction, and you can see price is migrating higher. If we split this out, this is what you get. And then again, and this is consistent with what you see on a bar chart. Here is your downside. These are the lows of last Thursday and Friday. They're very, 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 very close to each other. So this is the most important level. Now, when you split it out like this, what you also get is basically a distribution, an auction that began down here. So this is its own auction, and this gets into understanding how to use the market profile graph as a tool as opposed to a means in itself. You know, what you're seeing here is the profile parsed out chronologically into 1 month auctions. Well, the auction process is an ongoing process. The auction process of market development is in effect in all degrees of time all the time. So just slapping up the profile configuration of data that is chronologically constrained to a given time frame sort of can mislead you. This is the auction that began down here. We are in a distribution. That distribution is higher. The auction range from this low is yet to complete itself. Now, you know, if this continues higher, September will be a part of this distribution. But this is a distribution range. Now, if we go straight up for the next few days, that's going to be a very mature distribution range, and that brings in a market condition, and it brings in another set of if-then scenarios. And if that happens, we'll cover it at that point in time. But right now, and this is the same picture in all of the indices. This is your most important low. Now we can parse that out a little bit, and let's go into, this is when we're going to go down in time frame. Okay, now this is Friday's auction. I'm going to split it out. This is the day session from Friday. And you can see we have this huge distribution up here. Now, this is the level. This would be the early warning level that things may not be bullish, is if we were to take out this level. As I put in the report, this also coincides with roughly the halfway mark, the 50% retracement of this range. That's a general guideline when you have conviction, and conviction is a wide range bar. It can be a daily bar, a weekly bar, a monthly bar, a 1 minute bar. But the general guideline is you favor trades in the direction of conviction, and the first test of that conviction is if the market in the next immediate time frame that you're looking at retraces more than 50% of that bar. So this is your early test if we get down there. Now, who knows what we're going to do? Wouldn't be surprised to see us gap up under a bullish scenario. If we start to test this area, it brings into question the immediate bullish assumption. And that's true across all the indices. If we go to the NQ, all right, this is the daily view. You have the same thing. You know, the 50% retracement is above this distribution up here. It's its own auction. And then if we go up in time frame, now in market profile parlance, this has the look of a developing double distribution type of auction. And getting back to what I said earlier, September would be part of this. And then if we go to, let's go to the YM. The YM is going to have a very identical daily view. And these charts are in the report, in the written report. Here's your level here in the YM/Dow. Here's the daily view of that. Now you can see we have yet to extend the upper extreme of the August auction quite yet. And then to me, let's find Mr. Russell down here. Here we go. So here is Mr. Russell. Now what I'm going to do, I'm going to combine the previous month's auction into the one auction that it actually is. And you can see. Now here's the high volume node from the auction from, I guess, January into the end of May. This is July, end of June. This is July and August. Now I'm going to combine this into one auction. Now you can see the importance of this close. And let's split it out. Okay, this is Friday's trade. So you can see we have closed above the high volume node of the most recent 2-month auction and counting, as well as the larger degree auction here. That's why Friday's range is so important. Now, as long as we hold near the midpoint of this range, and we'll get that, we may get that test in Globex, who knows, if we gap up, I would expect to see this level tested or exceeded sooner rather than later. Okay, let's take a look at breadth. And breadth is nuanced. Breadth is a blunt instrument. Breadth is much more effective in identifying lows than highs. All of those caveats apply here. You've heard me say this. Those of you that have been around a while have heard me say this a million times. But if there's anyone new, you need to hear that. There's no rote way to trade this. There is art in interpreting it, etc. This is something I've used for most of my 36-year trading career, and it can be extraordinarily helpful at times, and it is in uptrends, it's a guide. It's not something rote. Now, something significant did happen on Friday. Breadth took out, and breadth closed on Friday at its highest level in well over a year. That's significant. That's a lot of upside momentum. The red line you see is a 10-day moving average of NYSE advancing issues. The green line is a 5-day moving average of NYSE advancing issues. And you can see the 5-day now is sloping higher and making the highest high it's made in months. The 10-day is diverging, but as I've been saying for a few weeks, we can go to 4,600, and it's unlikely the 10-day will exceed this level. Now, it's also something else I want to point out. The next significant top is very likely to see divergences. Almost certainly we'll see divergences in both the most recent pattern in the 10-day as well as the 5-day, and there is none now. Breadth also, what breadth is telling us, if it's typical, if this time isn't different, is that we're likely to see a series of higher highs and higher lows in price and lower highs in breadth before there is any significant retracement. Now, I'd be surprised if we see Friday's breadth high taken out again prior to a breadth reading of negative 2,000 or greater occurring. Now, what did what I just say mean? And listen carefully. I'm going to repeat it. I would be surprised if we don't see considerably higher prices. And I would be surprised if this isn't the peak in breadth prior to another washout low occurring. Now, that washout low, we may trade to 4,600, and then the washout low brings us back to 4,200. I don't know. I don't predict. But I can tell you these patterns play out in an uncanny fashion in general form. So this is giving us a really, really, really good, solid historical footprint of what has happened in the past and what should not happen in the present if what has happened in the past is going to repeat itself immediately. So what I would look to see is over the next several days to even weeks, lower breadth, but generally higher prices. And then ultimately what you'll have a series of divergences that occur that show up among the indices, between the indices in price themselves, as well as in this breadth work. It's very simple stuff. Anyone can do it. There's no magic to this. So it's really an interesting time. And again, if you understand auction market concepts and some basic simple concepts about the migration of value, migration of value shows up basically two ways. It shows up in the migration of the high volume nodes. And let me go back to that view. Let's make it simple and go to, let's use the S&P. And I'll go to daily. So when you have high volume nodes that are migrating higher, it is irrefutable. Value is migrating higher. Another way to measure migration of value that is underrated is to simply watch pivot highs and pivot lows. And this applies in all degrees of time. You can do this on a 5-minute chart, a 1-minute chart, a 30-minute chart. Now, I will say the more granular you go, the more noise you're going to see and the more false signals you'll get. But this is a daily chart. It's really, really clear, people. The market, the value is migrating higher. that can't be argued with. Now, you'll have some of the twidiots complaining because the market shouldn't be going higher and the market is going to stop on a dime up here. I don't know. Maybe it is. But if it's going to stop on a dime and we're going to have some Armageddon super crash because of magical mystery powers, well, guess what? I'll participate because at this level, I'm probably going to be short. And I can fine tune this if I'm just, a super trader and think that, I can go down to a 30-minute time frame, I can go down to a 5-minute time frame and apply something that is consistent and objective to put me into the market. And it keeps me from being stuck on stupid. So, guys, I hope you found this helpful. If you found this helpful, again, I would very much appreciate it if you would like the video. Please share the link with your trading buddies or in your chat rooms, and subscribe to the video channel. Have a great week.